Hello and welcome to Financial Intelligence. In this video, I want to talk about Dr. Micheal Burry's bet against US Treasury Bonds. Micheal Burry was depicted in Michael Lewis's book The Big Short and the subsequent Oscar-winning movie of the same name. Michael was one of the first investors to call and profit from the subprime mortgage crisis. During a new interview, Michael has revealed that he's betting against US Treasury bonds, which I want to discuss in this video. In the first part of this video, I'm going to quickly introduce Micheal Burry's background, and then I'm going to talk about the impact of inflation on US bonds, and finally, I'm going to talk about how Michael is betting against US bonds. If you like the type of content I provide, subscribe to this channel and give this video a thumbs up, and also hit the notification bell so that you don't miss any of my future videos. Part 1. Micheal Burry's background. Dr. Micheal Burry shot to fame by betting against mortgage securities before the 2008 crisis. Michael, the former head of Cyan Capital Group, was the first to predict America's financial collapse, as well as the first to create trades to profit from it. He forecast that the housing bubble would burst as early as 2007 and acted on his conviction by betting against subprime mortgages using credit default swaps. Michael also foresaw the failures of companies such as AIG, Fannie Mae, Fannie Mac, Country Financial, and Washington Mutual. He was profiled in Bloomberg best-selling author Michael Lewis's book, The Big Short. Michael lost his left eye to cancer when he was a child, and he was diagnosed with Asperger's syndrome as a child. Asperger's syndrome is a neurodevelopmental disorder characterized by significant difficulties in social interaction and nonverbal communication, along with restricted and repetitive patterns of behavior and interests. This might partly explain why he has been able to focus intensely and relentlessly on subjects of interest to him. He graduated with an economics degree from UCLA and completed his medical degree at Vanguard. Part 2. US bonds and inflation. US Treasury bonds are debt securities issued by the US government. Therefore, whenever you are buying US bonds, you are lending money to the US government. This is how US bonds work. As shown in this picture, first, investors would lend money to the US government by paying a principal to purchase the US bonds. Second, the government pays the bondholder semi-annual coupons, which are based on a fixed interest rate during the lending period. And third, after the end of the lending period, when the bond matures, the government returns the principal back to the bondholder. The government gets to use the money during that period and compensates the investor by paying interest every 6 months. The simplest way of evaluating the yield or return on investment for US bonds is to look at their coupon rates and layer in the impact of inflation. Let's take a look at a typical example. At the time of recording this video, the yield rate for 10-year US Treasury bonds is somewhere around 1.5%, meaning that when you lend $100 to the US government, you will receive a 1.5% interest rate each year for the next 10 years. At the end of the 10th year, you will get back your principal investment, which was $100. The average inflation rate, on the other hand, has been around 3% in the past few years. Therefore, your principal is going to lose 3% of its value each year for the next 10 years. The aggregate impact is that you will lose 1.5% each year by investing in 10-year US Treasury bonds under these assumptions. How fast you will lose money on US bonds is going to depend on the gap between the coupon rate and the inflation rate. Part 3. Michael's bet against US bonds. This chart shows the data I pulled from the US Bureau of Labor Statistics website. I'm going to post the link in the description box below so that you can check it out. The green line shows the historical 10-year US bond yield, and the red line shows you the Consumer Price Index (CPI) as a proxy for the inflation rate in the US. As you can see, up until 2005, the green line was above the red line, indicating that the return on investment in US bonds was positive. US bonds actually offered great returns in the 80s and the 90s. During the past decade, the 10-year US bond yield has been roughly in the same range as the inflation rate. Therefore, US bonds still offered decent protection against inflation for people who did not want to hold on to their cash. However, as you can see on the far right side of this chart, it seems like things are changing as the inflation rate has been picking up in 2021. Michael's main assumption is that the inflation rate is going to continue spiking in the United States in the next few years. Since US bonds have fixed coupon payments, his hypothesis is that the gap between the US bond yields, the green line, and the inflation rate, the red line, is going to widen even further. Therefore, according to Michael, US bonds are going to lose even more of their value to inflation in coming years. In order to benefit from these expected moves, Michael has placed a short bet against the iShares 20+ year Treasury ETF, or TLT for short, by purchasing put options on them. TLT is an ETF that tracks a market-weighted index of debt issued by the US Treasury with remaining maturities of 20 years or more. This means that TLT is composed of US bonds with durations of 20 to 30 years. Based on the same hypothesis, he has also purchased call options on ProShares Ultra Short 20+ year Treasury ETF, or TBT for short. TBT is an ETF that gives investors 2x short exposure to daily moves in US bonds with more than 20 years left to maturity. In summary, the big new short is betting against US bonds with longer maturity. He is using options to create his bets, which are not suitable for inexperienced investors. My goal from creating this video was to show you that investing in US bonds is not super profitable and things are likely to get even worse for US bonds. I will add the link to Michael's portfolio and recent purchases in the description box below, just in case you want to check them out. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.